放了10年了，为啥我这么去活呀？
在这个房子上，我们是倾家荡产，妻离子散，家破人亡。
老人闭眼的时候都没等上个房子。
In recent years, China's real estate market has been in a prolonged slump, with house prices continuing to fall. Against this backdrop, a mortgage inversion wave has erupted in China's real estate market. More and more homebuyers are finding that their assets have not only shrunk significantly, but they are even unable to repay their loans, even after selling their houses. Some have lost their houses and down payments, yet still have to continue repaying bank loans. So what is a mortgage inversion? Let's listen to the explanation from this blogger.
倒挂压垮了年轻人。
The mortgage-to-value ratio inversion is crushing young people. Just hearing the name is enough to make one feel miserable. What does it mean? It means that the home you painstakingly bought after emptying the savings of two parents plus the couple's families and taking on decades of loans, the home you thought was your most secure asset is now worth less than the money you owe the bank. For example, you bought this house for 6 million yuan. You paid a 1.8 million yuan down payment and borrowed 4.2 million yuan from the bank. You worked hard for over 3 years, putting a large portion of your monthly salary into it. You might have repaid around 300,000 yuan in principal, but because most of your payments in the first few years were interest, you still owe the bank nearly 4 million yuan. At this point, you might find yourself unable to continue paying due to job changes, family reasons, or simply feeling overwhelmed and wanting to sell. But when you check the market, your heart sinks. The same condo now can only sell for a maximum of 3 million yuan. You grit your teeth, tears in your eyes, and finally find a buyer and sell the home. Let's do the harsh math. The house sold for 3 million yuan, but you owe the bank nearly 4 million yuan. You pay back every penny of the sale price, leaving you with a debt of nearly 1 million yuan. That is $140,000. Not to mention your initial 1.8 million yuan down payment and the hundreds of thousands of yuan you've saved up over the past 3 years for monthly mortgage payments. All gone, vanished without a trace. What's the final result? You lose your home, the down payment, and all the money you've spent on mortgage payments. You go from being a property owner to a debtor overnight, owing the bank nearly 1 million yuan. This is called a mortgage inversion or insolvency. This isn't just cutting your losses, it's like you try to survive by amputation, only to find you're bleeding dry.
到底意味着什么？它的影响到底有多深？
Currently, China's economy continues to deteriorate after the pandemic, and housing prices are falling rapidly. According to data from the China Index Academy in October 2025, the price of resale homes in 100 Chinese cities fell by 0.84% month-on-month and 7.6% year-on-year. In some cities, housing prices have fallen from their highs to 2017 levels, a drop of over 40%. This is a heartfelt statement from a blogger named I Am Xiao Mo on November 8th. She said that the 2021 housing market was a harvesting spree for ordinary people. Today's people have had their savings drained, their energy exhausted, and their families ruined.
这就是我21年花了近700来万买下的房子。
This is me. I bought a condo in 2021 for nearly $1 million, and now nobody wants it, even for $330,000. The condo I bought at the peak in 2021 has now become a shackle for countless families. Last time I posted this video about my failed home selling, I didn't expect it to attract so many viewers in the same boat. I've received hundreds of private messages these past few days, and each one makes my heart clench. It turns out I'm not the only one trapped in the housing market. Let me tell you about Sister Zhang from the neighboring complex. In 2021, she followed the trend and bought a large 3-bedroom condo in the same complex. To make a down payment for a second home, she sold her shop in her hometown. Now, the house's market value has dropped by 1.6 million yuan. Her husband's company laid off employees, and she's been off the mortgage payments for 3 months. The bank's collection calls are non-stop. She's preparing to move to a rental apartment with her child and is urgently selling the condo at a low price, but it's been listed for 2 months without a single inquiry. Another netizen named Zhe got married in 2021, emptying both families' savings to buy their wedding home. Now the house's value has halved, and his mortgage payment is higher than the rent. He says the most agonizing thing is that every time he argues with his wife, the topic always ends up being why they bought the condo. Their peaceful life has been ruined by this home. Now he drives a food delivery service during the day and works as a chauffeur at night to make ends meet. To pay for the monthly mortgage, fearing the impact on their credit scores for late payments, they even dare not have a child. What truly broke my heart was the story of an uncle who in 2021 spent all his retirement savings and borrowed $28,000 to buy a condo for his son's wedding. Now, the condo is unsellable and his son's wedding is off. The man works 2 jobs daily and was diagnosed with high blood pressure and diabetes last month, but he refuses to spend the money on treatment, saying he wants to save it for the mortgage and not let his son bear the stigma of being a defaulter. Reading these stories, I suddenly realized that the 2021 housing market was a harvesting spree targeting ordinary people. We initially believed that lie that buying a condo was a sure thing, and we did everything we could to try. Clinging to the so-called sense of security, many end up having their savings drained, their energy exhausted, and even their families ruined by a single home. This isn't about evoking sympathy, but rather about letting more people know what ordinary people like us, swallowed by the housing bubble, are really going through. It's also to tell those who haven't bought a home yet not to be fooled by the rhetoric of must buy for essential needs, or the more you buy, the more you profit. Buying a home isn't a necessity, a stable life is. According to mainland media reports, the main victims of mortgage inversion fall into 3 categories. 1. Those who empty the savings of 6 family members and borrow money to buy a home. 2. Owners in unfinished buildings. 3. So-called flexible employment personnel who follow the trend of buying homes. In the current Chinese economic environment, homebuyers can hardly avoid the risk of mortgage inversion. Let's look at a real case. The blogger calculated the figures of his client, which is an example of mortgage inversion. Our clients, a couple surnamed Tong, bought a condo purely out of necessity. They met a logistics company, started a family, and then went on to work independently. They have 2 children, one in kindergarten and the other in preschool. After 8 years of marriage, their business and family life were basically stable, and they wanted to solve their housing and children's schooling problems. So, the couple pooled together 1.8 million yuan. The wife's parents contributed 200,000 yuan, and the husband's parents contributed 300,000 yuan. They scraped together 2.3 million yuan. In November 2000, they bought a Vanke Golden Domain condo, 89 square meters, for a total price of 6.6 million yuan. The down payment was 2 million, and taxes and agent fees amounted to 170,000 yuan. After some basic finishes, they spent a total of 2.32 million yuan, taking out a 4.6 million yuan loan from the bank for a 30-year term with monthly payments of 26,400 yuan. For this condo, the couple used up half their life savings and emptied their savings of 6 wallets. Finally, they settled down in Shenzhen. The man's parents also moved in to help take care of the 2 children. This allowed the couple to dedicate more time and energy to running their logistics company. This peaceful period didn't last long. By the end of 2023, the house price had dropped to 4.5 million yuan, and by the end of 2024, it had fallen to 4 million yuan. Now its value is only around 3.5 million. After calculating, as of October this year, they had made 47 payments totaling 1.24 million yuan, with only 260,000 yuan being principal, leaving 980,000 yuan remaining. All the money went to interest, and they still owe the bank 4.34 million yuan. A rough calculation shows that they initially paid 2.32 million yuan for the condo, and with the monthly payments, the total was 3.56 million yuan. Now, selling the condo could mean losing 840,000 yuan, meaning they've lost 4.4 million yuan in 4 years. In the end, they might lose both the money and the condo, their life savings gone. On the other hand, recently several large Chinese banks have directly entered the real estate market, offering a large number of second-hand homes, attracting market attention. Compared to ordinary resale homes, these properties are generally sold at below market prices, some even as low as half the market value. Most of these properties come from foreclosed properties seized by businesses or individuals who couldn't afford the payments. The banks are bypassing the formal foreclosure process, releasing these properties directly to the market under the guise of direct bank supply. Let's look at the videos circulating online. People are worried that the most severe winter for China's real estate market is about to arrive. Banks across the country are starting to sell off properties in a clearance sale, and a real estate storm is brewing. The Sichuan Rural Credit Union system listed 24,000 units, Guangdong Rural Credit Union 12,000 units, In Liaoning Rural Credit Union, 11,000 units. What does this mean? It's equivalent to the entire inventory of a medium-sized real estate company being dumped on the market, and the prices are even more outrageous. A condo valued at 2 million yuan is being sold by banks for 1.5 million, a 25% discount. Have you ever considered what this means when banks, the institutions that know money best, start selling houses recklessly? The second-hand housing market is doomed. This time the wolf is really at the door. Even banks are starting to sell their properties, and this is just the first wave. Will more follow? It's highly likely. Many people sell their condos and don't get a penny back. Some even lose money. This isn't the worst of it. Now, banks are also selling their own second-hand properties. Do you still have an advantage? Hurry up and escape. What kind of operation is this? It completely baffled me. What signal is this sending? No more middlemen taking a cut. Real estate agents can go out of business, which means good news for homebuyers. Housing prices are starting to fall. Jilin Bank has over 2,000 units, Tianjin Bank has over 1,200 units, and Lanzhou Bank has added 1,800 units this year alone. Major state-owned banks are also following suit. Agricultural Bank of China, China Construction Bank, and Bank of Communications are all selling at low prices on major online platforms. Why are banks going to such lengths? Doesn't this reveal the downturn in our real estate market, the risks from individuals and families, developers and local governments ultimately impacting the banking system? Previously, it was Evergrande and Country Garden that ran into trouble. What about now? These banks are holding a huge number of mortgage properties, assets used to settle debts. So what signal does this massive property sale by banks send? First, the number of directly sold properties by banks has surged to unprecedented levels. In the bank clearance section of Alibaba's asset platform, information on properties listed by banks across the country is extremely dense. State-owned banks, city commercial banks, and rural commercial banks have all joined this effort, with small and medium-sized banks becoming the main force behind the direct sold properties. Low prices are the most prominent feature of these bank-sold properties. The blogger below put it very clearly, China's economic downturn and falling housing prices across the country have led to an increase in mortgage defaults. The large number of properties repossessed by banks has created a new round of pressure on the market. Ultimately, it's ordinary people who suffer. Currently, these banks are conducting large-scale sales through their internal systems and platforms such as JD.com. How much are these houses selling for? Basically 50 to 80% off the market price. Even more outrageous, for example, in a project in Lanzhou, the price is only 2,300 yuan per square meter, not even covering the construction cost. In a small community in Liaoning, 156 units have started bids ranging from a minimum of 80,000 yuan to a maximum of 200,000 yuan. How can the listed second-hand and new homes in the market be sold then? So, where did all these houses and the banks come from? Actually, most of them are foreclosed properties, because previously the transaction volume of foreclosed properties was extremely low. For example, in the first half of 2025, the national foreclosed property transaction rate was only 15%. The cycle for foreclosed properties is too long, so banks might think of selling the properties themselves. Though the price is lower, the price adjustment is more flexible, and at least the money can be obtained quickly. Buyers also have no worries because the property rights are already registered in the bank's name. Issues such as unclear property rights and occupancy have been resolved, making it a completely worry-free purchase, much less troublesome than foreclosed properties. If we connect the recent wave of price reductions in newly built homes, mortgage-to-value ratio inversions, and the direct bank sales of homes, you'll find that the price reduction lead to mortgage-to-value ratio inversions, resulting in increased defaults. Ultimately, banks repossess these properties at low prices for direct sale, using this as a starting point to exert further pressure on the market. You might think that direct bank sales are merely a process of market repricing. However, the rural credit banking system in just a few provinces already has tens of thousands of properties listed. With such a massive number, how long will this period of pain last? The large-scale sale of homes by banks also sends a second signal, a surge in non-performing loans across China's banking sector. A research report from Kaiyuan Securities points out that the 2025 interim report shows an overall increase in the non-performing loan ratio of listed banks, with some banks experiencing increases exceeding 20 basis points. Meanwhile, non-performing personal business loans are generally on the rise, with some banks reporting increases exceeding 30 basis points. With continued declines in housing prices, many borrowers are facing cash flow difficulties, leading to higher non-performing loan ratios across both personal mortgages and business loans. This has led to a rapid expansion in the scale of mortgage properties held by banks. The third signal is that banks' concentrated sale of mortgage properties will severely impact the national real estate market price system. This impact may create a cycle. The more banks lower prices to push sales, the more suppressed surrounding property prices become, leading to more mortgage properties becoming negative assets, further exacerbating the pressure on banks to dispose of them. Amidst the widespread online buzz, the following blogger clearly states that the increase in the number of properties sold directly by banks indicates that the downturn in China's housing market is not over, and the consequences will be even more severe. If you observe carefully, you'll find that most of these bank direct sale properties come from 3rd, 4th, 5th, and 6th tier cities with virtually no liquidity. These are essentially foreclosed properties that couldn't be sold at auction, now becoming non-performing assets for these banks. So what impact will this bank direct sale of properties have on our real estate market? The increase in the number of bank direct sale properties also indicates a significant signal. The downturn in our housing market is not over. The increase in the number of homes directly supplied by banks will inevitably accelerate the continued decline in our secondary housing market. The increase in the number of homes sold directly by banks also indicates that our efforts to stabilize the market cannot be just empty words. Our real estate market urgently needs a more significant interest rate cut and more favorable policies to stabilize the housing market. So, for home buyers, does a home directly supplied by banks offer a bargain opportunity? The answer is no, because China's real estate bubble is even bigger than Japan's, which was 20 years ago, with no bottom in sight. The CCP's current high-pressure control over the real estate crisis is like accumulating floodwaters in a dam. Once the dam collapses, there will be no time to escape, and the future is extremely dire. That's all for today. If you enjoy our content, please give us a thumbs up, subscribe, leave a comment, and share it with a friend. We appreciate your support, and we'll see you next time.